Election season is underway, and the choice as to who will be our president will no doubt impact many of our lives on a very personal level. One area many people often look at, though, involves their finances. So how does an election result really play into the markets? We delve into this topic in today's sponsored segment with Cory Sickles. He is the president of Safe Harbor Retirement Group. Good to see you, Cory.
Good to be here, Robin.
All right. Do you first and foremost get a lot of questions about this? Like, what's the market going to be? What's going to happen if this president wins versus this president? I mean, people are always kind of interested in that.
It really started to happen fourth quarter last year.
Okay.
Because, everyone's worried. We've had a good year in the market. What's it going to do next year? It's a presidential election. And, if you statistically or historically go back, the president or the presidential election, or even actually the president, really has no impact on how the market actually truly performs.
Okay.
Now, it's emotional. I think it's more emotional for a lot of the people that are actually thinking about it. And it's one of those things, I call it noise. And if you look at the noise that we had last year, we had inflation.
Yeah.
We actually, we had two wars going on. We had interest rates. And the presidential election is just a little bit of other noise. It will have a little bit of an impact on the market for maybe a few weeks, but overall, it really doesn't.
Yeah, because you say historically there have been positive gains for stocks in these years, right? So when people look at it, I don't know if they see that. They don't look at the history of it. They're just in the moment.
They are in the moment. And historically, we do have a positive market. Now, there might be a little bit of volatility. I mean, I would actually expect, for the market to probably hopefully be, pretty good, maybe for the first 6 months this year. And then you're going to get people that now we're kind of getting that emotional side of it as we kind of head into the election. Because who's going to be, is it going to be Republican? Is it going to be Democrat? The market in general doesn't like not knowing, it likes stability. But I think once the election takes place, then it doesn't really matter, whether it's Republican or Democrat. And something that's kind of shocking, if you actually historically go back and look, a Democratic president actually outperforms the Republican presidents a little bit better, from that 4-year standpoint.
Okay. All right. The funny thing is, too, watching the news cycle, obviously, we see it all the time here. But the presidents get a lot of blame. Is that part of the emotional part of it, is that people think the one who is not in their party should be to blame for any fluctuation in the markets?
Yeah, I think that does take place, right? And
Yeah.
usually if that does happen, then they're probably not going to be there for the next term.
Okay.
Right? Because
Yeah.
people do vote.
Yeah.
The market kind of really, if you look at the market, that kind of also says how's the economy doing, but more importantly, it says how are corporations making money.
Okay.
Right?
Yeah.
If you go back and look at it, you got to be more concerned with, are companies making money? If companies are making money, that means they're hitting profits. That means the stock market's going to go up.
So, truthfully, when we look at it, is there anything we should be paying attention to during an election year when it comes to our investments? Yeah,
the one thing I would look at more than anything else is probably more of the Senate and the House, right? Because if you do have the same party, and as well as the president, if you have, obviously if it's all three, that's one thing. But when you actually have the House and the House and the Senate the same, the one thing that you're going to end up probably seeing is they're going to be able to push certain things.
Right.
So when they start pushing certain things, it might affect certain sectors. So, for the first part of Biden, we actually had, if you look at it, the companies that did really well were companies that were going green. Right? So if you would invested in that during the Biden administration, you probably have made money. Those things could change now if we actually have a little bit of, say it goes more Republican. So it's the sectors that will probably have the biggest impact.
All right, Cory, and what factors would you say tend to have a stronger, more consistent relationship with market returns compared to election outcomes? Where would you put that?
The one thing I would probably say more than anything else is going to be the Federal Reserve, especially with the state that we're in right now. And if you kind of go back and you look over the last few years, they've been controlling interest rates. Interest rates is actually something to really look at. But the interest rates, what they're really trying to do is handle inflation.
Right, yeah.
And if we can bring inflation, have that come down, you'll eventually be able to probably see interest rates go down And let's face it, the market likes that.
Yeah, they definitely do. Okay, so educating us on issues like this, other issues obviously with our retirement investments is what you do. You offer a complimentary meeting if somebody is out there, they don't have a plan, they have questions about stuff just like this.
That's exactly right. You know, all of our meetings are complimentary. You know, there's no financial obligation. We have offices in Dublin and Easton. And again, we're more than happy to put a plan in place for you, even review if you already have a plan, just to make sure you're on the right track.
Okay, so you can do all of that going to safeharboroh.com. Call the local number there on your screen as well. Cory, thank you.
Thank you, Robin.